Hello everyone, welcome back to the EQ Markets YouTube channel, and this is the Monday market outlook for the week December 11th down to December 16th, 2022. Super glad to have every one of you here. By the way, if you're just meeting me, my name is 𝗟𝗓𝗏 and I'm the head of product research and education for EQ Markets Global. So not to waste our time as we always do it, I'll run you quickly through the economic happenings for this week and all of the volatile news and happenings that we're expecting for this week. And of course, we're going to check many more things that is going to affect the market, and we'll move on from there. Right. So this week is going to be a very interesting week with a whole lot of volatile, with a whole lot of news that is going to cause so much volatility in the market, as you can see from here, from Monday down to Friday. Right. But all attention most likely is going to be on Tuesday down to Thursday. All right. Tuesday down to Thursday, we have a lot that is going to be happening, but that notwithstanding, it seems we still have a whole lot more volatile news and economic happenings that are going to come up on Friday, right? So for that of Tuesday, what exactly are we looking at that is going to cause a whole lot of volatility? Of course, by 2:30 p.m. Nigerian time, we will be expecting the core CPI, okay? We'll be expecting the CPI or core CPI, which is going to affect the United States dollar, all right? Of course, we see a whole lot of the forecasts for this month to be negative, okay, compared to what has happened previously in other months, right? Like for the CPI month to month, previously we had 0.4%, but we're forecasting about 0.3%, right? Should all of these news turn out a bit negative for the United States dollar, then of course we know how we can take advantage of that. But that notwithstanding as well, um, on Wednesday, we have the FOMC as well, which is coming up, okay, by 8 p.m. on Wednesday. This is another very interesting news that we would be looking out for as Forex traders, okay? The FOMC projections, economic projections, and FOMC statements. Don't forget also, we're expecting the funds rate, all right? We're expecting the funds rate that is coming up. Now, we're already aware that the United States government is also about to hike interest rate by 50 basis points. All right. So currently it's standing at about 4%. Okay. But we're looking at that the interest rate hike will be on 50 basis points, bringing the interest rates in the US to about 4.5%. But of course, as always, if Tuesday CPI has a lot of negative effects on the United States dollar, then most likely we might even see these figures come up to about 5% or even 4.75%, which is like a 75 basis point as against the 50 basis point that is being forecasted. All right, so let's keep an eye on that. Okay, that's going to be dependent on the outcome of Tuesday's CPI. If how negative the level of the impact of negative the level of negative impact rather that it had on the United States dollar, right? And then interestingly, on Thursday, we still have so much that is coming up, okay? We have monetary policy assessments and review also coming up from the Swiss National Bank. That is by 9:30 a.m. on Thursday from the Swiss National Bank. And for the first time in a very long while, we are seeing an interest rate hike, especially on the Swiss franc. You know, it had remained 0.5% for a very long time. And this time around, they are looking at hiking interest rates by 50 basis points to bring it to about 1%. So we also need to look at that very carefully. And as well, we are also looking at a monetary policy assessment and also bank rate review coming up for the GBP, which is the Great Britain pound. Currently, the interest rate in the Great Britain is standing at about 3%, okay? Standing at about 3%. And of course, we are expecting a 50 basis point interest rate hike as well on the Great Britain economy, okay, bringing it to about 3.5%. Not only that, for Great Britain, also for the euro, we are expecting an interest rate hike as well, which will bring the euro from 2% to about 2.5%, which is also 50 basis point interest rate hike. Okay, so from the Swiss National Bank and from also the from the Great Britain economy and the euro, these three we are expecting interest rate hike all on 50 basis point levels. Okay, on Thursday, that is happening on Thursday, and it's happening back to back. So we need to really put an eye on that and also see how we can take advantage of all of these economic happenings. And then lastly, on Friday we're expecting not so much, but at least on Friday, we are expecting some PMIs that are going to be coming out from flashes PMI, both affecting the Great Britain, the euro, and as well the dollars as well on Friday, which is December 16th. So let's put an eye on all of these and take advantage of them all. And of course, this is most likely the week that a whole lot of technical analysis is going to fill a lot of people. So just just a little advice to every one of us, okay, that are going to solely depend on technical analysis. All right, this week is going to be a very volatile week. It's going to be a very volatile week. You know, every economy is trying to wrap up and make economic decisions as against 2023, but wrapping up for the year 2022. Okay, and this week is that decisive moment, all right, that we all have been waiting for. So this week we're going to experience a whole lot of volatility, guys. Let's plan that into trading for this week. I would greatly advise that this week we consider more of the fundamentals, okay? And of course, those of you that are good with fundamental analysis, you add that into your technical analysis as well. Or rather, if you are just using robots or EAs and all that, I would also advise that you review your risk management on your robots, your EAs, or your technical strategies that you are using for this week. But if you've made a lot of money, all right, I would advise as well this week you reduce your risk or chill a bit. All right, so let's quickly look at the dollar. Let's quickly look at the dollar and what we're expecting as well for this week. So this is the dollar index, all right? So it's currently trading at around 104.733, all right? So what I am basically anticipating happens on the dollar is that it's going to continue to depreciate to about this level, which is around 103.650 thereabout, okay, which is this level below here, 103.650. And of course, from that level, is going to bounce off to come back to retest this. All right, now it's going to be depreciated if Tuesday's news has negative effects on the dollar. Of course, it's going to be depreciated, and of course, from Wednesday when we have of course, when we have the FOMC, which is the Federal Open Market Committee, have the economic projections. If it turns out positive, then we're going to see the dollar most likely say bounce off back to around this level of 107.5, right? And from there, we're going to see the dollar continue to fall below. Already, don't forget it had broken this major trend line that we've been watching out for in a very long while. Okay, so this is what we'll be expecting on the dollar index. Just before we go ahead to talk about your favorite pairs and what we expect to happen for this week, don't forget to stay up to date and follow us on all of our social media handles. We are EQ Markets Global on Facebook, EQ Markets Global on LinkedIn, EQ Markets Global on Twitter, EQ Markets Global on YouTube, and also EQ Markets Global on Instagram. As well, you can find us on TikTok as well, EQ Markets Global. Everywhere, do well to follow us. We're also on Telegram, and our Telegram channel is open channel. So go to Telegram, type EQ Markets Global, and join that beautiful community that enjoys a whole lot of analysis and also promos, offers, and bonuses. All right. So let's quickly jump over to your favorite pairs and what they are most likely going to have for this week. Okay, so this is Euro USD. So on Euro USD, I am more of sell sentiment for this week. The reason being that this particular trend line on the daily time frame had still not been broken. All right. So last week we looked at this, but the market had a lot of consolidation for last week. Okay. And of course, this week I'm still sell biased on GBP, on Euro USD, right? Sorry about that. So yes, 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 yes. Remember, it takes two highs or two lows to establish a trend line, but the third touch on that trend line confirms that that trend line is a downtrend, right? So we had one touch, we had two touch here, and the third touch as well at this level of 1.06071. So this is more like a confirmation that Euro USD this week is going to most likely have a pull to the downside. And of course, if you're a long-term trader, you can have an instant execution on sell for Euro USD, all right, after watching this video, and you can have a very tight stop, let's say somewhere just above this high here. So your stop can be around 1.06325, all right, and then look forward to taking profit around 1.02967 thereabouts. Okay, that's for a long-term trader. If you're a mid-term trader, you can of course scale down to lower time frames, so the H4 or the H1, and of course you see beautiful opportunities that are presenting themselves here for you to trade. This is already an instant execution because prices is at an area of value and also confirmed for a sell, right? So that being said, right, let's quickly look at GBP USD and what we will also be expecting to happen on GBP USD. So for GBP USD as well, we can see that there is a confirmation that this is a downtrend, right? So we can see the first touch, the second touch, and the third touch, which confirms that this is what, a downward trend. But merely looking at this, we see that prices have actually come back into an area of value, which this area particularly is a resistant area, right? So at these resistant areas, we expect that prices will have a retarded bullish movement, and of course the bears will take over the market and push prices below. All right, so for this week we're expecting a downward movement as well on GBP USD. Okay, if this particular resistance zone at around this level of 1.22789, or that zone around 1.21965, if that resistance level holds, then of course we will see prices fall back into these levels at around 1.14653. So let's quickly look at gold as well. For gold as well is at a very significant level, which is obeying this trend line as well. The first touch, the second touch, and of course the third touch to confirm that this is a downward movement. Okay, so for last week we said gold was going to sell. It actually had a massive sell-off, but then it came back to retest this same trend line. And of course, you see how nicely it retested. Let me zoom in to show you something. A candlestick really spectacular. You can see this is more like an inverted hammer, right? So on an area of value, that has a very significant meaning, right? Inverted hammer on an area of value simply tells you that there's going to be a downpour. So for this week, we're expecting as well a downpour on gold to around 1726 axis. Okay, so gold most likely is going to have a sell-off to 1726 level. Already we've had confirmation from our third-party confirmatory third-party oscillating indicator called the commodity channel index, and of course we've had a sell confirmation. If this sell happens to hold, then find gold around 1726 in the coming days of this week. I also talk about USD JPY, which is also a favorite pair to a lot of people. So on USD JPY on the daily time frame, we saw that USD JPY actually broke structure here, right? So this was a major structure here. So it was a resistance, it broke and then came back to retest, in fact twice, and then retested, tested, and broke. So what we're most likely expecting that is going to happen this week is a retest back into this area, maybe at around 137.946. All right, or well above that level. It can come into this same level here, which is 138.500. Okay, and from that level we can look out for a sell confirmations to take on USD JPY. Okay, so if that sell confirmation is valid, we'll see USD JPY fall down to around 131.76. Okay, not to also leave behind maybe the Nasdaq 100 or the Dow Jones as well. So for the Dow Jones as well, it's been a beautiful ride all the way up to the upside. Okay, a beautiful bullish rally. But then we are looking at a continuous bearish movement should this trend line still hold and prices continue to trade below this trend line. Don't forget as well, the although the price actions are trading above the two moving averages of 200 and 100 period, but then so long as we don't have a crossover, we don't have a golden crossover yet, right? This still remains a valid downward movement because this death cross is still much valid so long as we've not had a golden cross yet. Don't forget that. So we are still expecting perhaps more bearish movement on the US 30. Of course, if this zone is effectively cleared out, all right, because this is a zone holding US 30. If this zone is effectively cleared out, we expect a retest and of course a massive downward movement on the Dow Jones. And also, let me quickly touch a bit of US oil for those who love the US oil, right? So on the US oil on the daily time frame, we can find this particular area as a major support area. And trust me, prices most likely is coming back to test this area at around 62 or $63 per barrel. All right. So in the coming weeks, what we would find with the US oil is that we're going to continue to have a bearish movement on the US oil. It's currently trading around $72 per barrel, but we're going to have a continuous. There might be some form of bullish pullback, right? There might be some form of bullish pullback into, let's say, around this zone here. But then, of course, we're expecting prices to come into $62 and $63 per barrel. And that's all for now for the analysis that we have for this week. Okay, like I said, don't forget to stay up to date and follow us on all of our social media channels. We're EQ Markets Global, every social media handle or channel you would want to find us. Thank you so much again and see you next week.